Hello everyone. So we've gone through the first quarter already. Time flies when you're having fun, but it's a good opportunity to recap some of the highlights for the diamond industry so far this year, and there were many. I've identified the 5 most important developments that, in my opinion, took effect in the first 3 months of 2025 and that will continue to affect the market for the rest of the year. So let's begin. Takeaway number 5 were the holiday season results, particularly in the United States. And I know the holiday season was last year, so technically maybe it shouldn't qualify for this little competition, but we did get a better understanding of the state of demand as the results trickled in and were published in the period January through March. And here's what I learned, what I noticed from the results. Perhaps stating the obvious, but certain segments did well and certain segments did not do so well. Independents outperformed the majors, and that was somewhat driven by the strong performance of the high-end luxury jewelry segment. Those independents with an upper income clientele were arguably the big winners in 2024. Among the luxury houses, however, the performance was actually quite mixed. Richemont, with its portfolio that includes Cartier and Van Cleef & Arpels, among others, was the best performer, while LVMH's jewelry division was okay, and Kering's jewelry business was its strongest category in an otherwise average set of results. Across the board, those luxury groups were pulled down by weakness in China, and similarly we saw continued declines at the major Hong Kong jewelers Chow Tai Fook, Luke Fook, and Chow Sang Sang. Back in the United States, though, the majors who tend more toward commercial quality product and serve a middle income clientele such as Signet Jewelers and Brilliant Earth saw declines. Meanwhile, lower price point jewelers did better. Pandora saw double-digit growth, and while its synthetic diamond offering is still a very small portion of total sales, Pandora had double-digit growth in that segment. And Swarovski's jewelry division showed similar patterns. So my big takeaways, and it's not black and white and not without exceptions of course, but in general terms, we're seeing growth in the high end and a shift toward lower price points among middle income consumers in the United States. And that brings us to our development or story in 4th place, which is the trading environment with its many moving parts. And I divide this into 3 separate headlines: reduced supply that affected the trading environment, tariffs and geopolitics, and the Hong Kong show. We had a bit of an anomaly in the diamond industry in the first quarter. Retail jewelry sales were relatively positive, as we mentioned earlier, and therefore should have given diamond demand a boost, as we tend to see in the first quarter after the holiday season. But the diamond market remained slow, which means there was a disconnect between jewelers' sales and their buying in the wholesale market to replace the inventory they sold at the end of 2024. The way I read that is that their caution to buy reflected cautious consumer confidence and the uncertainty surrounding all the tariff talk, the rising gold prices, and general geopolitical uncertainty. At the same time, retail jewelry sales in the first quarter seemed to maintain a positive momentum, and so there was some expectation that the market would turn upward or at least stabilize. And that's where the most surprising headline of the period came in, that the Hong Kong show in early March was decent for diamond traders despite their low expectations going into the show. Now, did that reflect an awakening of Chinese demand, or was it a function of the dealer market in which supply had been suppressed and there was some pull through from US and European demand? Personally, I think it was the latter, which may bode well for the industry moving forward through the rest of 2025. We'll see. We are still waiting for that Chinese dragon to reawaken. While those first 2 shape-shifting events relate more to market trends, the top 3 are more news-driven. So in 3rd place, the Responsible Jewelry Council, or RJC, unveiled its laboratory-grown materials standard, providing a standard for ethical, social, human rights, and environmental practices for companies handling lab-grown materials such as lab-grown diamonds, lab-grown gemstones, etc. In my opinion, the lab-grown diamond industry has received a free pass when it comes to ethical standards, while the natural diamond industry has gone to tremendous lengths to raise its compliance levels over the years. All the while, the synthetic sellers continue to make unsubstantiated claims for being the more ethical product. Hopefully, the RJC standard will raise the bar for the lab-grown industry and hold it to a higher standard of transparency, giving them a baseline to measure their own ethical and environmental practices. Story number 2 was the decision by the European Union to delay the implementation of mandatory traceability-based evidence for diamond imports. The policy was slated to be implemented on March 1st, adding to the market uncertainty since the industry wasn't quite ready for it at that point. So there was some relief when the deadline was pushed back to January 1st, 2026, giving the trade more time to adapt traceability programs into their operations, and that adoption will be a running theme for the next 9 months, no doubt. Before we get to our story number 1, we have some honorable mentions that might have made the cut in an otherwise quieter news cycle. It's worth mentioning the new strategy of Signet Jewelers, signaling a shift in focus at the company, which perhaps mirrors a change in direction for the broader diamond and jewelry market. Catch my analysis of that development in my previous video. The publication of the first earnings report by IGI, International Gemological Institute, since it listed on the Mumbai Stock Exchange in December, gave us important insight that we didn't have before to the world of diamond grading and the lab-grown market in particular. And I think my favorite story of the period was the unveiling of the Mediterranean Blue, a cushion-cut 10.03 carat VS2 clarity, fancy vivid blue diamond that Sotheby's will bring to auction in May with a pre-sale estimate of $20 million. It's a stunningly beautiful stone. Maybe I'm foreshadowing here because that sale will no doubt be a highlight in the second quarter. Okay, if you haven't guessed by now, our top story of the first quarter, as determined by our very sophisticated algorithm, aka my brain and my opinion, was the signing of the long-delayed agreement between the government of Botswana and De Beers outlining the nature of their partnership moving forward. That includes the renewal of the 25-year license for the Botswana mining joint venture and the new sales agreement enabling Okavango Diamond Company to ramp up its sales of Botswana rough. The agreements also aim to enhance beneficiation and enable the investment in marketing programs with Botswana as the central message. The agreements are important because they will gradually change the dynamic within the global rough market, but also because they reinforce the important relationship between De Beers and the government of Botswana, which did get a little testy for a minute there. And it also strengthened Botswana's role as a premier diamond center. There are still a few loose ends in those agreements that I'm looking out for and need answers to, and I expect those to come as we enter the implementation phase over the next 9 months. So there you have it. The first quarter was a fantastically interesting period for the diamond industry, with these 5 stories being the highlights not only for their newsworthiness, but also for the influence they'll continue to have on the diamond market, particularly in 2025. What do you guys think were the most important stories of the year so far? Did I miss any? Let me know in the comments. I'd love to hear from you. And hop over to thediamondpress.com, where you can find a summary of all the stories that took shape in the diamond industry day by day, week by week, month by month. Look out for the news section on that site. So thank you for watching. I'm Avi Kravitz. Don't forget to hit that like button and subscribe to my channel. Every bit of support is greatly appreciated. Have a great second quarter, everyone. I'll see you guys next time.